Hello, everyone. Yes, we are live both on our webinar platform and also on our YouTube channel. So welcome to the webinar. My name is Olena Gryniuk. I'm the CE Director at the SME Banking Club, and from this year also the founder and director at VOA Digital. And this is the platform where we promote and develop the digitalization of receivable finance and build an active community of experts eager to drive change in the receivable finance. And this is our next webinar within VOA Digital. And yes, we speak about digital factoring. And today we will speak about application of artificial intelligence and machine learning in factoring, and precisely how it can be used to analyze data. Yeah. My guest today is Federico Avellán Borgmeyer, Chief Partner Officer and Member of Management Board at FCOM. Hello, Federico. Always glad to have you.
Thank you, Elena. It's always a pleasure from my side being on one of your events, and looking forward for this particular webinar.
Yeah, thank you very much. And yes, before we go to the topic, very short information from my side. So we planned this webinar for 40 minutes. We are recording this webinar. So right after we finish, you will receive the link to the video. And we will start from the presentation. And in the second part of the webinar, we will have a Q&A session. And you are welcome to type your questions in the chat at once when you have it, and we will read them and answer your questions during the Q&A session. Yeah, so let's go to our topic. And yes, Federico, you presented your solution, which is called CubX, a machine learning solution by FCOM exactly a year ago. Yeah, we had a dedicated webinar on that, and also you talked about that in our last year CE conference.
Yeah.
So this is the solution which uses machine learning algorithms to analyze data, including credit scores, financial statements, customer payment history. So yeah, what are the updates from your side during this year? I'm passing the mic over you, and let's start with your updates, and then we go to the Q&A.
Thank you so much. Right. First of all, can one see right now my slides on the screen? Is it visible?
Yes, we can.
Okay, fantastic. Well, welcome everyone from wherever you're joining us tonight or today. My name is Federico Avellán Borgmeyer. I'm Chief Partner Officer of FCOM. FCOM is a company based in Frankfurt, in Germany, actually close to Frankfurt, in a small city called Neu-Isenburg, between the airport and the city of Frankfurt. We have been in business on factoring, and that's why it says here FCOM Factoring Symposium. We just had a symposium a couple of weeks ago on the subject matter I'm going to show to you. For now, almost 25 years. So next year is going to be our 25th anniversary in factoring and receivables finance. During that period of time, many things have happened. The markets have grown a lot. Just to give you some background information, the German market, when the Factoring Association was founded 50 years ago, we just had 50 years anniversary this year in the Factoring Association in Germany. When Factoring Association started 50 years ago, in this country, we had 1 million Deutsche Mark, which is 1 billion Deutsche Mark in factoring transaction volume per year, which is about 500 million euros per year 50 years ago. This year, we're having 400 billion. So an enormous amount of growth. If you make the calculation, this is something about 11% compounded average growth rate per year. So there's very little in the market out there that has been growing 11% per year over 50 years consecutively, on and on. So this industry is growing, and when the industry grows as such, from 500 million per year to 400 billion, that means that you're also transacting a lot of data. Our machines or our systems transact per year at our customer sites something over 210 billion euro annually, and that is way over 100 million invoices per year. So data, right? So a few years ago, when I joined FCOM, I was thinking, hey, I know that we're doing our job right, in the sense of we're doing a good application that allows financial institutions in handling their massive amount of invoices in a very profitable and very efficient and automated fashion. But my question at that point in time was, are we doing the right job? Not the job right, but are we doing the right job? What's the difference? What are we doing with the data? And apart from doing the job right in doing the transactions that are expected from our customers that we do, my question was, are we learning anything out of what's happening in here? Or are our clients, which are financial institutions, uh, learning from what is happening in their particular ecosystems with their clients and debtors and so on? And the answer was not much. I would say nothing. So we started investing in something that we didn't know what it was. I wanted to know from my team, tell me what the data that is resident in our systems is telling us. Is it telling us anything at all? Maybe nothing. But if it's telling us something, what is it? What it's telling us? So we created not CubX, but CubX, which is what you see on the screen. CubX stands for Customer Behavior Explorer, because at the end of the day, it is the behavior of our customers or your customers, if you're dealing with your clients as a financial institution, that will tell you something. Um, and the mission or the vision was to recognizing and predicting opportunities and risk. So it's not only one or the other, it's both. Recognizing and predicting opportunities and risk in the ecosystem of a factoring company. And wouldn't it be nice if we could do that? Of course, it would be nice, because at the end of the day, if you can recognize and even predict, look into the future about your opportunities and risk, not only by gut feeling, but based on real data, uh, past data, current data, to tell you what it is most likely going to happen. And here we come into AI, because when we say most likely, then we're moving into artificial intelligence. AI will not tell you 100% this is going to happen. AI will tell you most likely, like we think as well as humans. Most likely this is happening, because nobody can really look 100% into the future. But in taking the massive amount of data that is out there right now, remember 50 years ago, as per today, uh, there is a lot of data that can help you to come close to predicting the future. And that's why we say with artificial intelligence and machine learning into the future. Okay, so this is the first page. Let's move on. Zinzalabim. What do we see here? Well, we see here an ecosystem. Um, we see an ecosystem from a particular factor. We've been working on beta testing our systems, our CubX system, with a large and a small customer of ours over the last 2 years. And what you see here is yellows and reds and green circles, is something that should give you some hints, information. So, like when you're driving a car, uh, a yellow a yellow light would tell you, watch out. A red light would tell you, oops, stop, and go in detail, because there might be something that is worthwhile looking at, and green is you're free to go. This is out of millions of data. So the result, and just this is the results out of our 2 years of work right now without CubX, is that there would have been 7 to 10% phantom invoices in those two, let's say, test clients of ours. So the undiscovered risk portfolio, due to change customer behavior, is based on those numbers that came out there. So you would not have recognized them if you were not using CubX. Obviously, with CubX, you would have, and according to our findings, we had 90.7% early detection of those phantom invoices. And the early detection of these portfolio risk with the help of CubX expert systems and the machine learning explorer, which is CubX, came out because we identified them by changes in customer behavior. So when nothing changes, nothing will happen, neither in a positive or negative direction. If the world halts and stops and doesn't do anything different from the previous day or the previous year, then everything will continue as before. So opportunities and risk are very well known. But when there is changes, then we move into a space where we don't know what's going to happen in any particular direction, positive, negative, or even neutral. And therefore, when we have these big amount of data, the data will tell us about what could happen according to the behavior that's happening in your ecosystem. All right, let's do some review on because Olena was asking what happened between last year and this year. I would like to go even further back. So if you were talking to me right now, or you were standing in front of me, or sitting in front of me, and maybe I can even ask the question, I don't know if this is possible in here, and I ask you, what is artificial intelligence? Actually, I did post that question during the symposium we had 2 weeks ago in Neu-Isenburg by Frankfurt, and there were many answers popping up. And the answers like artificial intelligence is something that will tell you what to do. Okay. Artificial intelligence is smarter than humans. And so it went. Because there is a lot of opinions out there what artificial intelligence is. Reality is, and this is not invented by myself. This is invented by Alan Turing, or the so-called Turing test. By the way, Alan Turing is the father of artificial intelligence back then in the 1940s, when he used AI to decrypt Enigma, which was a German World War II cryptographic machine, and the English counterintelligence wanted to know what that encryption meant all about. And Alan Turing, a mathematician that lived in those days, made it possible. It was basically the event when AI was born, if you like. So it was a big machine, a huge machine that was working on that, and eventually it found out the code to connect or to decode Enigma. So what is artificial intelligence? Well, artificial intelligence is when you are now what is seen here as C. Let me see if I can have a pointer in here. Laser pointer. So you're now C. And you have a wall in front of you, and on the right hand side you have a person talking to you or communicating to you in either way, and then on the left hand side you have a machine communicating with you in either way. And if you cannot tell, if you as C cannot tell which is which is a machine and which is the human, then we talk about artificial intelligence. This is one of the means and ways in identifying what is AI according to the Turing test. There might be another and other definitions, but this is the one that came out way then. Okay, so we're at the beginning. We're back in the 1940s, and since the 1940s till today, a lot has happened. What has happened since the 1940s, which is super important that we can talk about AI today. Number one, you see computation in millions of instructions per second, called MIPS. So we see that here. By the way, I'm an engineer by training, so that's why I'm talking to you like that. So by the 1940s, computation in MIPS was virtually zero, apart from what Alan Turing and perhaps a few others were using. So nothing really significant, basically zero. And then it went and went, and it was not until maybe 1 or 2 decades ago that things were changing. So the computational power has increased significantly, as we can see here. And now another thing is, and that's super important, as important as the computational power is data. If you have no data, there is no use of for a huge computation power, because you need computation power when you have a massive amount of data to process. So you need both. You need computation power and you need data. And look at what happened to data. Data came from nowhere and it's now here. So we're talking about not megabytes, we're not talking about gigabytes, we're not talking about terabytes, which is probably something that you have at your home when you store your disk. You may have 1 terabyte or 2 or 3 or 4 terabytes for your pictures. No, we're talking zettabytes. Zettabytes is millions or billions of terabytes. So it's many zeros. And this is getting, as you can see here, growing by the year exponentially up. Okay, so this is the reason why now in 2024, 2023, and probably in the future, we can talk about AI to be going into a direction where it will deliver us results because it has computation power and data. And this is what we see, AI development moving up. What else? Last year, we talked about how do we, in factoring, and this is our topic. We're not going to talk about other things in AI, but factoring today. How do we today work in a factoring organization to figure out if customers, debtors, and so on and so forth are risky or not risky, give us chances or not, etc. Well, we look at the conventional way, which is on the left-hand side. We look at their financial statements, credit, agency scorings, payment behavior by hand or in different ways, industry analysis, market trends. Okay, and when we look into machine learning, which is something that helped us to get to those 90.7% of accuracy, what we do is we process big data. We detect complex patterns. If someone tells you, I know everything about factoring, and the one and only measure to look after if something is good or bad is this particular thing, then that's probably not enough. It's perhaps one of the components of the equation, but not. It's many elements, and that's why detect complex patterns. Then adapting to the changes, automate data task, and very important here, reduce bias and noise. If you haven't done so, there is a very good book from Daniel Kahneman, who wrote a book about noise and bias in this case as well. So let's look at the data, what it's telling us, and then come to conclusion. Gut feelings are good, but when they're substantiated with little noise or no noise at all and no bias at all, if possible. One more thing about review of past year is our system is called EFX, so that's why we're using this here. we use all the data that comes into the system from our clients, client master data, debtor master data, invoice payment data, etc. And then we have two different systems that work in parallel. One is called an expert system, and the other one is a supervised machine learning tool. So they go hand in hand, basically making their own analyses. Expert systems are based on, as the name says, the expertise from human beings. We transfer that into the machine, and then the machine will calculate according to what an expert or many experts consider relevant, and it will deliver some results. Um, Machine learning is a little bit an independent animal that works with data, period. So you have a black box, you put a lot of data in, and the system will tell you something. Whether it makes sense or not is a different thing. So what we do is we do the same thing. We feed the machine with data and look what comes out. Everything that makes sense, we keep. Everything that doesn't make sense, we um, we tell the machine what to think of. That's why we call it supervised machine learning. Okay. What else? Yeah, maybe a little bit about this. We start into when you start with machine learning. For those of you who are not very deep into this, very shortly, you start with you start with supervised um, unsupervised learning, then you go into supervised learning, and then you go into reinforcement learning. So this is basically the way how it goes. We'll not go into the details for lack of time. In the concept that we developed last year was, hey, if you talk to a factoring company, let's say a factoring company has between 50 and 500 clients, and then of course at least the same amount of debtors per client. So you have a universe of clients and debtors that creates your ecosystem. That ecosystem, what we see here, is one picture, but that picture changes basically every minute, every second that you do work with them. So that picture today is like this, and tomorrow uh, it may change into something different. The one particular debtor or client may turn yellow or red or green, depending on its behavior changes, and those changes can happen from one moment to the next, not drastically but slowly, and the system is detecting those changes. So that was the concept that we did, and the results you saw at the very beginning. So 1 year of testing with real data in full service. This is what we did in full service, and we'll start with doing the same thing in what we call in-house, which is a sort of invoice discounting with the start of next year. Very briefly, how we do that: we do data collect. We go on premise with our application, because we take the data out from there, and then we work with Oracle Cloud Infrastructure, which is a system that we use. And the Oracle Cloud Infrastructure allows us to use their computing power. Remember, we need computing power. We don't have that computing power on our laptops to do put in all the data and then get the results. And Zinzalabim, at the end, the user can log in and then see whatever is relevant, as we saw in the picture. What are the benefits? Yep, I need to come to an end. Utilizing the full potential of the factoring data that's out there, of course. Receive timely warnings about possible payment delays, could be one, but there are many more. Strategic customer categorization, maintain customer relationships and customer advice. Improve portfolio for risk monitoring, but also for chances. Improve cash flow management, and basically that's it. It is going to change the way factoring is going to be done in our markets, in Central and Eastern Europe, but also in those markets where there is not so much information, because the learnings that we get from the machines today may change and vary from geography to geography, from industry to industry, um, from, let's say, the status of maturity in the market to another one, but not that much. So what we're seeing here is we're going to learn so much about us by doing this, um, that it will help many new entrants to work in an environment that's much safer and gives them more opportunities to develop their business. What's our roadmap? Um, Go live in full service in the next in the Q1 2025. Then we test in-house, or as I said, um, in invoice discounting, and then go live with full service client and debtors, which we didn't have here because here we only have clients, and here we would have client and debtors in the system. And then by the end of the year 2025, go live in-house as well. So this, in a nutshell, is what CubX is all about. This is what we believe is going to be a game changer in our industry, because we're not just doing our job right, but we're doing the right job. And it will provide a much better transparency into our industry, step by step. First starting with the client, then number of clients, and then who knows where it will lead us in the future. Anything I can answer to you, I can do today, right now, with the help of Olena, or you can contact me at any time, if you just take a picture of my QR code via LinkedIn, or yeah, all the other telephone numbers and emails that are on the screen. Thank you. Thank you so much.
Thank you very much, Federico. Thank you. Yes, we will distribute the presentation and your contact details so everybody can reach you after the webinar. And we have first questions. Of course, the first one comes from Ivan. Thank you, Ivan, for your question. Can CubX work on any factoring software or just with FCOMs?
Well, in this case, that's a very good question, and I have asked my question that also. We have right now designed it for us. That means, because we know what data is in our system. In theory, it could work with any system out there, but the system is now configured to work with ours because we know where to retrieve that particular piece of information. We know the files, we know the data, we work with Oracle, we know exactly where the pieces are, and then we design CubX according to that. So the answer is, at the moment, no, it doesn't work with any other, it works with ours only. But obviously, if someone did the same job we did with their own backend system, yeah, perhaps after 2 or 3 years, you would be there where we are now. Yeah.
Okay. Yeah, and the next question from Javier. Thank you for that. Rule-based domain expert structures and machine learning are techniques for underwriting that have a lot of years in the market. What would you think is the secret source of your solution? Any results coming from benchmark or backtest that you can share with the customer?
Absolutely. When I talk to the team that we hire to work on this, we hire data scientists, AI experts, ML experts. We said we're very open-minded here. We don't know what we're going to find. So it was a little bit like Christopher's Columbus going east, or in this case west, trying to find India and found America. So it was a little bit like that. We went to look for India, and we found a few things. One was, we believed that expert systems were going to be leading in here. So we asked experts from our customers. Our customers are financial institutions. And we told them, or asked them, hey, how do you measure risk? Went to the next one. How do you measure risk? How do you measure opportunities? How do you measure opportunities? Don't. We asked our own people. So we had a bunch of experts from our own, but also from our customers, companies that have been in the market for decades. And we computed everything into the machine. So this is the expert system. If a value is like this, that's not good. If a value is like that, that's cool. And these kind of things. So KPIs, trends, etc. So we used their wisdom. And then we took the other one. We said, let's now let the machine do its own thing, the machine learning portion, as I described in that triangle of machine learning, supervised, unsupervised, and so on. And we figured that the machine learning portion was going to beat expert systems. So at the end of the day, beating also the experts. That doesn't mean that the experts are not correct. It just means that the experts are not as thorough, uh, cannot react that fast to changes that ML can do. Because experts get their wisdom from the past, from experience, and then they figure, oh, if that happened, which was not good, then for the future we'll change it. But it takes a longer, much longer time. The machine is much faster in this, and it will detect even in a little bit forward looking the anomalies and will make you aware. Maybe some of them are not accurate. Yep. So you have to teach the machine, this is accurate, this is accurate, this is not accurate. So next time when something like that pops up, I remember Mark Mandula um, in the symposium was asking Federico, how do you deal with hallucination? For all those of you who have been playing a little bit with ChatGPT or any other generative AI tool, you'll probably have figured that it's super nice in many respects, and then something completely stupid comes out as an answer, and you'll think of, okay, it's not so good. So this is hallucination. So this is where the system is not good at. This is where the system needs to learn, and this is where we also train our system to get less and less hallucinated. Yeah, hallucination is a funny word because it sounds like you're taking LSD or something. But this is what it is, and obviously it needs supervised training, as we said before, to come to a point where it's unsupervised. So in the development. So yeah, I hope that answers the question.
Mhm. We have a question from Chris. Thank you for that as well. Does this have the potential to work with shadow ledger data extracts when used in conjunction with bulk factoring products?
Help me with shadow data. Just to mm, let me. So can you repeat the question,
Does
Olena? Maybe
it
I
have
can.
the potential to work with shadow ledger data
Ah.
extracts?
Mm, yes and no. um, um, I would say yes, because everything that is data supporting our system, or giving information from a particular client's behavior is good. Um, would it be enough? Definitely not. So um, I was asked by one of our clients to perhaps extend in here if we were also using external data. So because you can have, let's say you're monitoring um, your customer behavior using the data you have. I would say this is super accurate, or this is super um, real time because it's happening right now. It's like when measuring your pulse data on yourself. Okay, you know this is real. Um, Now, using external data like information that's been uh, posted, let's say, or documented in any other um, system outside, let's say a credit rating agency, some analysis from your clients, some news feeds out there telling, hey, this company, the stock of this company went down because they made stupid investments and stuff. Perhaps not reflected right now uh, in our system in its behavior, but with that data from outside, it may have an implication later on. This is something we haven't done yet. So we're using only the data that is in our system, resident in our system. But near future, and perhaps in 2026, we will be adding information also from customers that are publicly available and try to get portions of that involved as well. Interestingly enough, in our expert systems, um, experts, of course, in industry are relying on these data already. So they're asking credit rating agencies about what do you think of this guy, what do you think about that company, and so on. And uh, and I asked my team, what is the value or the weight that experts pose on these third-party opinion? And they said, not much, Federico. They don't really, they use it as an add-on, but it doesn't really alter much their decision. It does if the signals are super horrible, but in principle they rely on also on the data and their judgments that they have. It's like one piece more, but it will not affect dramatically their conclusion. So it is one more element, one more block for the decision making. So it's not something that people rely 100% on.
Mm-hmm. Mm-hmm.
Yeah.
I have a question regarding the if so whether the CubX will be applicable, let's say, for the factoring companies which are just starting the operations, like I don't know, maybe fintechs or just companies factoring companies that are operating less than a year, or is
Mhm.
or applicable for the companies which are at least several years on the market, which have data actually, yeah.
So what you're asking is, will they be using it in the future? Is that what you're asking,
Or,
Olena?
or yeah, like whether the CubX will analyze these customers, so the buyers and debtors of the factoring companies which are on the market rating, I don't know, less than a year, for example, whether there is any let's say the benchmark or the deadline for the company to the minimum number of years in operations of the minimum number, let's say, of
Okay,
data,
okay, got
make
you.
it
Okay,
work. Yeah.
yeah. Right now, what we asked our clients that are in the testing, the beta testing clients, again, a large one and a small one, and for us, a large one is a company that's way over 1 billion euro in transaction volume. So, and a small one is a company that does up to, let's say, 200 million euro in transaction volume. So big and small. Ask both of them to deliver or to provide us with at least 12 months
12 months.
data, at least. If 24, better. 36, better.
Mhm.
Again, going back, the more data you have, the better, because then you can extrapolate more things.
Mhm.
Uh, and with the, let's say, little data that we had, because it's two only that we used so far, we came up to very good conclusions. We believe that this is going to be much, much better as we go on and have others joining the club. So the accuracy of the system will, of course, increase. Now, bear in mind that a system like the machine learning system creates its own algorithm itself
Mhm.
to come to conclusion based on the huge amount of data. So if you take that algorithm out, just extract the algorithm and say, okay, now let's go into a market that is completely virgin, where there is zero data. And as I told you already, we're entering markets where data is very little or non-existent. Africa,
Yeah.
continent, there it's a nascent market where people tell me, Federico, but in here we don't even have credit insurers. And you ask the credit insurers, why don't you go there? They say, well, because there is no data.
Mhm.
So catch
Yeah.
22. Yeah. Uh, then I told them, guys, maybe you will not need to go. because if a system like CubX is learning so much about the behavior, and may it be in a different geography, may it be in a different industry, but it perhaps tells some way already how companies and humans behave. If we don't believe that in different geographies people are completely different than us,
Mm-hmm.
but rather similar with some deviations, of course, then you will have a good starting point. Um,
Mm-hmm.
and, uh, and of course, the system will adapt to that particular geography, industry, etc., quite quickly and not start from zero. So,
Mm-hmm.
to give the answer, I believe that it will, in some respects, support the insurance companies, or perhaps at even some point in time, I don't want to say replace them, but at least those ratings that are based basically on very past information will be outdated because you're dealing with real-time data and not only with historical data.
Mm-hmm. Mm-hmm. Yeah. Okay, and the last question from my side is, what are the other processes except the analysis of the customer behavior in which you think AI and machine learning can be or have already been applied to automate the factoring process or the parts of the factoring process?
Mhm. You know that we had been working with AI not just since a year or two, but since 10 years already. Factoring expert matching is one of the applications that we have together with our partners from Tech for Fin in Barcelona,
Mm-hmm.
uh, which is an AI, you know, basically development made over 10 years ago. And what it does is um, help you in the day-to-day um, handling of factoring. We have payments that come in, hopefully, otherwise no business. Uh, and we have open invoices. So you have open invoices that you financed as a factoring company, and then these invoices payments that are coming in. So you're seeing the money finally after 2-3 months to flow in. Um, if um, if you're if you have one invoice being paid per day, you don't need FEM, obviously, because you know which invoice is being paid. But if you have, let's say, 2,000 open invoices and you receive 500 payments per day, and the machine, and then you look at the payment and you don't know what is being paid because perhaps there have been payments that pay two, three, four, five invoices at the same time, or there had been discounts, credit notes, whatsoever, then you need to have a little army of people working in your organization trying to figure out which is which. And in our particular experience, 30 to 50% of invoices cannot get matched automatically by a system. It doesn't matter who the provider is, it doesn't matter
Mm-hmm.
because you can't. So that means that you have 50 or 30 to 50 can be, but 50 to 70 cannot. So that means a lot of invoices need to be matched manually. And with factoring expert matching, you have an expert system that tells you, hey, Olena, most likely, it won't tell you 100%, most likely this payment is paying those four invoices.
Mm-hmm.
Oh, let me see. Oh my God, yes. And if it was right, the assumption, then you press enter, the system starts learning. Because perhaps your name, Gryniuk, was not spelled correctly. Maybe someone wrote Gryniuk with
Mm-hmm.
the Latin I instead of Y, and the system is digital, doesn't recognize that, and says, I don't know, Olena Gryniuk with Latin I. Boom. So the system starts learning if someone again spells your name like that. So the
Mm-hmm.
system is learning, and then it will deliver to you more automated responses over time. We did the testing with clients also in the past. We can tell them, give me your 12 months data, and I will tell you uh, how much of that can be done automated, and our average is 90% of automated allocation of payments to open invoices after 1 month of operation. So this is a very nice also piece of AI expert system in this case that makes your life easier. Yeah.
Yeah.
And there are going to be many more. I mean, you know that we partner with Moneta Go, so we try to also reduce the risk of double pledged invoices in the market. You know that we partner with Lenvi. Lenvi is also in the risk identification space. So we try to figure with our partners on how to make a better industry out of the ones that we have, in our benefit, of course, as a company. But this can be even done with competitors and stuff, because at the end of the day, we all benefit.
Yeah, for sure. All right. We are coming.
Maybe Carol is listening. He's my preferred competitor. He knows that, so maybe we can work in this kind of space as well, because I think there is so much to do in the industry.
Yeah, let's drive together the digitalization of receivable finance. Thank you very much, Federico.
Thank you for having me.
Thank you,
everyone. Have a great day.
All the attendees. And Karen, thank you very much for your feedback and for participating and staying till the very end. Thank you, and yeah, we'll see each other in next month. We'll have another webinar on the digital factoring topic. So thank you, and see you soon. Bye-bye.
Thank you.